Assalamualaikum madam. In this video, we will present about case study of company law. The course code is DPA30083. Our group members are Amira Shamila, Alia Maisara, Amni Safira, Shazaneni Aimi and Nur Arisha Hana. We hope this presentation will provide a clear and understanding of analysis about our selected case study. Next, let's move on to the table of content. Our presentation will cover the following parts. First is introduction, second is legal issue, third is relevant law principle, fourth, duty of care of auditors, fifth, frequently asked question, and the last one, contact information. For our case study, we focus on Mawar Sadin Berhad, an audit firm in Kuala Lumpur that audited Cempaka Berhad's financial statement for the year ending 31st December 2024. The auditors relied only on information given by the company accountant and confirmed that the net assets were 30 million ringgit. Later, an investor named Dania discovered the actual assets were lower and now plans to take legal action against the audit firm for negligence and mispresentation.
So, for the legal issue in this case, the main question is whether Mawar Sadin Berhad as the auditor can actually be held responsible for negligence or misrepresentation towards Dania.
So let's move to the relevant company principle. First, duty of care of auditor. Auditor must act carefully, honestly and professionally when preparing audit report. So, juru audit mesti bekerja dengan berhati-hati, jujur dan profesional dalam menyediakan laporan. Second, negligent. If an auditor fail to exercise reasonable skill and care, and someone suffer a loss, they can be held liable. Kalau juru audit tu cuai dan menyebabkan kerugian kepada orang lain, mereka perlu dipertanggungjawabkan. And the last is misrepresentation. Misrepresentation is giving false or misleading statement that cause other to rely on them is a legal wrong. Memberi maklumat palsu atau mengelirukan orang lain adalah satu kesalahan undang-undang yang boleh dikenakan kepada auditor.
In this case, Kaparo want to buy a company called Fidelity and they relied on the audit report by Dickman. The report show profit, but actually the company was losing money. After they bought it, they sued the auditor. But the court said the auditor didn't owe a duty of care to Kaparo because the report was for the company and its shareholders, not outside investors.
Alright, next, application to the case. Mawar Sadin Berhad did not verify the information given by the account. That means that the company accept the account information without checking whether it was true or incorrect. Under the law of negligence, they had a duty of care to verify any information before using or reply on it. Okay, next, they signed the report without using its currency. This shows carelessness by signing the report without checking its content. Mawar Sadin Berhad failed to the responsible care, which is a breach of their professional responsibility. Okay, next, Dania relied on the report when decided to invest. Dania made her investment decision based on the report. This demonstrates the element of resolution where a party depends on the information provided by another. And lastly, the information turned out to be false, carrying a financial loss. Since the report contained false information, Dania survived a financial loss. That's all.
Critical issue about this case is not doing job properly. Mawar Sadin Berhad failed to carefully review the accounting's information and audit details. They relied too much
trust without clarifying everything before signing the audit reports. This shows a lack of professional care, diligence, and responsibility, which violate the standard in auditing. And the next one is losing public trust. When auditors fail to carry out on their duty properly, it damages the credibility of the audit profession. The public, shareholders, and investors may lose confidence in audit reports and accounting information. Maintaining public trust is crucial because the purpose of auditing is to provide assurance that financial statements are reliable. So the last one is giving wrong information. The audit report contain incorrect figure of asset, leading to misleading financial statements. Providing inaccurate or manipulated information is unethical and violates the principle of integrity in auditing. This provided false information to Ms. Danya and other investor, which violates unethical of in auditing. Accountants and auditors must ensure that financial information is truthful, accurate, and free from bias or misrepresentation.
So, in this case, Dania was only a potential investor who relied on the published accounts, but Mawar Sendirian Berhad didn't know her personally, and the audit report was meant for Cempaka Berhad, not for her investment. So, Dania may not be able to sue, and Mawar Sendirian Berhad is not liable for negligence. So that's all from us. Thank you.